Good morning, everybody. Well, this may be a short review because everything looks pretty much the same, but let's see. I started with the Dow futures here. Same little tight range starting out the day. Hopefully, today things might get moving one way or another. I think the thing normally I wouldn't be really paying too much attention to it, but um, there were two bond auctions that got the market moving based on uh, not enough people showing up. So it's at 1 o'clock. No, there's actually three. There's two at 11:30, a 3 month, which I would imagine people are going to want that, short term. Um, then the 6 month, and then at 1 o'clock is the 20 year. So just keep those times in mind. They possibly could move the markets. As intraday traders, you got to be aware of these things. And in the past, it probably wouldn't have made much difference, but today is different. So same little tight range, was a little rejection on Friday. Dow futures wasn't a big deal. But the range is getting tighter and tighter. There's a void below. The upside here, really, we think it would stall there initially. And the ideal scenario for the bullish case is to have a continuation pattern, a downside rejection where it dips down and prices come back up. It could happen on a gap, which isn't happening right now, or an intraday drop and forms a bottoming tail bar, or a nasty red day like this, a 180. Right, so this is the highest odds continuation pattern. It's a range expansion bar, right, big bar, and it's after the first move, which was at resistance, and we thought maybe it would come down a little more, but it didn't, and immediately reversed back up. So the second one, which could work, but still has lower odds than the first one. And we'll see what happens. Right now, it's just chop back and forth, back and forth. That being said, in the room we find little intraday moves that are profitable, trading the futures, or you can trade, whatever the leveraged instruments, but they're little short-term trades, and as intraday traders, yeah. Alex is reminding me at 2 o'clock is the FOMC minutes. Maybe they move the markets. I mean, at this point, I think the world is pretty much set on the opinion that the Fed is done raising interest rates. We speculated on that several weeks ago when this started to turn lower. It was a speculation because at the beginning it's like, wow, that's interesting that this broke under some support. And let's see if I can have a line chart here because, yeah, and spread it out a little bit so it looks a little more meaningful. And so what I had pointed out in the advisory letter was, hey, look, this is interesting. This breaking down as it did. So, and then as we learned afterwards, the Fed chair came out with his dovish comments, and that rallied the markets. And so now the markets are anticipating rate cuts next year. However, interest rates are still relatively high. So them pausing makes total sense at this point. So, we continue to keep an eye on these things. This can continue to come down. The 10 year, which has been declining, and the market's very happy. It's coming down to this support point. So even if the markets do go up, and they typically do go up during the Thanksgiving Day holiday, especially the day before and after, and assuming interest rates come down into the support area, I think then risk begins to grow significantly of at least chop sideways, some kind of a pullback. Doesn't suggest anything significant yet, but we got to be aware of these levels. Sentiment is reaching an extreme. It's got a little ways more to go. So a little more upside, maybe to 4,600, and things would be aligned there. We'd have sentiment and breadth aligned bearishly. If interest rates came down to support where they would at least stabilize, the dollar broke down last week. Markets loved that. So that broke down. That's positive for the markets. You can see the weekly chart breaking through that support there. You can see the initial rejection, the new high failure. So that has room to go before it reaches some significant support levels. So we'll see what happens there. Other positives that occurred, regional banks, but they're at the 200. And so, that's at this pivot high. So they've stalled, and we've got all of this stalling no matter where we look. Gasoline came down a lot, and that's where the market started to bottom. And looks like they're flat here, but they're on some support. So things to watch in the coming weeks is, of course, interest rates. Does gasoline start moving up? Inflation, crude oil, right? That's fell significantly. That's a positive. That's coming into these support levels. And so it came down to this one and had a 180. It hasn't gotten up to the pivot. Momentum is slowed. So we measure slowing momentum without indicators. We just look at the distance between lows and reversals, and they got closer together. So buyers are beginning to step up in this area. It hasn't flattened out. The 20 is declining. It's under the 50. The 50 is declining. It's under the 200. So we would look for stabilization somewhere around here. And, if it starts bottoming out like that, this would be one of the things that we'd be looking for in the weeks to come. If some deeper correction in the market may be coming our way, oil bottoming out, gasoline bottoming out, interest rates bottoming out, the dollar bottoming out. And that isn't to say they're going back up to the highs. They don't have to. But if those negatives began to bottom out and turn up, well, and common sense would say they were bad for the markets before, and they're likely to be bad for the markets again. So we'll just monitor that and see, do they bottom out? Do they break support, which would lead us to think, wow, this is interesting. Can they go back? Could oil go all the way back down to the bottom of this trading range? So that's the unknown, and we'll continue to monitor that and update accordingly. Bitcoin been flailing around, wide range up here, doing nothing. It has room to go higher, but in a more wild gyrations back and forth, it isn't doing anything either, as the markets, but it's got room to possibly go higher. That probably that 40,000 level is going to be a sticking point, of course. Whole numbers typically are. Gold, just whipping around here at minor resistance. Silver last week, right, was a more interesting type of move, but still within a mess of pivot highs and pivot lows. The futures of Russell, up at resistance, the 200 MA, but a positive move off the bottom of the trading range. We'll see if this can continue to consolidate and get some bullish price action. The buyers step up on the dips, maybe toward the 50 MA. Looking at the ETF, similarly, just chopping back and forth. There's lots of unfilled gaps below. So keep an eye on that, set alerts. Just marking off the death cross, so it's called. And no one really talks about that on the Russell. They typically point that out on the Dow or the S&P. And it's interesting looking at the Dow, how all of these moving averages are just clustered together right into this unfilled gap. You don't see that too often. And we would interpret that just by, all of these moving averages clustered together in an area of support where that would be a significant support level. However, there's an unfilled gap waiting here up above that. So, before any of that happens, got to be aware of what's immediately below. But it's an interesting observation to see all of these clustered together in one place. And, what that's telling us, I'm going to spread that out so that it makes the 200 longer there, is, the wild price action. Whereas, look, spread it out. Here they were closer together. And if I spread it out more, this whole from the end of last year to, I have to spread it out for it to load more of the moving average, where this, correct wild correction that occurred, wild moves up and down and up and down, and it gets tighter, and, the rally, and then, the correction that we saw. And so all of that wild price action knocking off old information, right? The 200 knocks off 200 days ago, the 50 days ago, the 20, and so on, and start averaging in the current price data where everything begins to come together. And the price, it's still wild, wide trading ranges, but maybe this foretells of, and I'm speculating here as I'm thinking and talking, of narrower ranges, more subdued type of trading, and we're getting a glimpse of that. And let's hope it doesn't continue like this, because that's super frustrating when the markets really aren't moving much. But I think, and we'll see in the weeks to come and into next year, whether these ranges begin to tighten up, and that would be, I think, a good thing. Well, it'd be a good thing from the point of view of, look, if interest rates stay low, all those other negatives stay relatively low, and things begin to tighten up, and, going to the weekly chart, if we then start going to, a monthly chart, so at the end of this year, we'll be talking more about longer time frames, yearly time frames, monthly time frames, quarterly time frames, in the advisory letter. And we start looking at these higher time frames, and then things tightening up. And maybe all of those negatives, which have created such wild price action over the last 2 years, and looking at this pattern, which you can recognize as a little downside shakeout, could support, if everything comes together, a bias that this market might be able to have a really nice 2024. So we'll see how things progress. But again, as you see wild price movements in one time frame, you compress them into higher time frames. And the weekly is still kind of wild, but as we go out to the monthly, things begin to take form. That makes sense. And we'll see if this bar closes positively like this. And of course, then we start looking at other sectors, top-down approach. All right. SPX. Spiders, as we do. Lots of unfilled gaps, tight range at this pivot high. Where price is, on the top of the trading range. Weekly, top of the trading range at resistance. So for holding on to the gain with no sign of giving it up. And SPX. Now, the distance, right, the average range has tightened up considerably from being close to 60 down to just under 40. What is it? So what for those missed the train like me? The answer is always the same, Jose. For those that missed the train, you now wait and you're patient and wait for things to unfold. There are day trading opportunities almost on a daily basis. Um, at some point, there will be some meaningful rejection of support or resistance, and individual stocks will provide us with high probability credit spreads. So you can be in the green room with us. You can subscribe to Dan's weekly credit spread letter, which has, you know, great content as far as, overviews of the markets that he writes. And look, the trades are, well, Dan's reminding me our letter. I mean, I provide ideas, but Dan is the master of the options here. So, and the real magic comes from his almost 30 years of managing credit spreads, which isn't an easy thing to do. You have to have a certain stomach for them, I guess, mindset, and he's really good at it. So, look, those are income type of trades that, whether they're zero DTE credit spreads, or things that expire in 1 to a week or so, those are things that you can take advantage of on a day-to-day basis. So while you missed, or many probably missed this move, it was an exaggerated, crazy, move. I don't know if I've ever seen something like this where there's 4 unfilled gaps below. So don't beat yourself up with that. Anyway, as far as swing trades go, we're finding setups in the advisory letter. I'm concerned with the bottoming type of catch up trades that if this market does, come down a bit, some of those might whip us around a little bit, but that's the unknown. We'll see. So I hope that helps answer. And answering something, we got 16 new trades in the advisory letter. So it's not that we're not finding trades, but if the market does something crazy, it can play havoc, but that's the unknown. We don't know. So we just see what unfolds. It's getting long here. So, other markets, they're just not moving around much here. And transports are up. They moved a lot. They're stalled here, but the positive is that they took out major resistance, so they broke the downtrend. But they're susceptible to pullbacks into gap fills like everything else. All yours, Dan.
Good morning. Happy Monday. So a number of miscellaneous comments just to add to what Greg was saying in no order here. He was talking about narrow ranges. And in a different way of defining it, of trends happen when you have higher demand than supply, right? They're willing to pay higher prices and you make a higher low, higher high. Now, this is a 4-bar consolidation in a narrow range, particularly Wednesday to Friday. And so the one concept that makes up our method that just jumps out at me in light of this is the concept of retracement. So a move from here to here highly suggests a retracement, but it ain't happening. And so that means that people who have bought are comfortable with the valuations and not selling. So it's very strong. It is what it is. Secondly, in the room last week we were talking about, hey, which is stronger, a bull rectangle or a bull flag? A flag being a 30-degree counter trend retracement, and we said, well, the rectangle's stronger because it retraced less, but they are both independently very viable. When you have a pattern and an entry and a void and a stop. So, and then another comment on the number of trades. Yeah, we have a checklist of selling either naked options or spreads, and we actually did not have as many as I hoped for in the weekly options letter today, but it's not because of lack of patterns, as I just typed out. What did I say? So 16 new trades posted for our advisory people. And those are both stock and option trades. It's because I go through the checklist and we're at the last Friday was the monthly cycle that ended. And there's so many good patterns that don't have weekly options. Now you could sell a monthly one. And then the other problem is liquidity. You go through the checklist and we're looking for vetoes, reasons not to take a credit spread, and it's liquidity is the biggest one. All right, so I got a couple of alarms going off here pre-market. Well, let's talk about Boeing here. Got an upgrade. Greg, do you remember we sold a put spread down here? And it was a breakdown failure. That was a beautiful breakdown failure after a collapse like this. But gapping up, I don't like put spreads far from the 20, but if we can get any juice under Thursday's low, we'll watch this pullback here. That's an idea. And yeah, I think it's going to be a kind of a narrow, boring week here with a positive influence into the holidays. So we'll see. Microsoft's in the news. The OpenAI guy getting fired, going over here. This was a monster range pre-market. I mean, this has a $7 range pre-market. So that's a big percentage for it not being earnings. But it's extended. We'll see what it does. NVIDIA earnings after the bell tomorrow. I was going to put this in as a credit spread and, but for earnings vetoed it under Thursday's low, because then it's a climo with a green bar ignored and a 5-bar turn at major resistance. So things that run into earnings like this, I just have a default. I'm bearish on it. I don't care if it opens up, down, or sideways on Wednesday morning. My bias would be, shorting a credit spread if it sets up in the first 30 minutes. What other alarms did I have just go off here? Breeze. This was a gap breakout. It's a breakout daily, weekly, monthly. Look at that beautiful bottoming pattern on the monthly. And we have a lot of bottoming patterns that we have in the weekend letter they're good patterns on multiple time frames, and possibly the catch-up situation of people chasing the underperformers as opposed to chasing a NVIDIA. So here's one right here, Wolf. Bottoming pattern. Oh, thanks, Doug. Yeah, I actually I'm actually on my mic. I'm traveling home at lunch here today. So this is a bottoming pattern. Daily, weekly. It's in a downtrend, the weekly, but I got a 1, 2, 3. It's a bottoming pattern. The 20 MA flattened out. I got bullish price action for the last 3 weeks. So my alarm went off, so that's good to go. Actually, let me just tell subscribers that right now, because it gapped over the entry. So I'm going to say Wolf over 5-minute high ago. I'll keep it. Breeze was over 50.05, so we'll watch that. I had cough alarm go off. So this is a bull rectangle. Here's my flagpole. Draw a big rectangle over the last 2.5 weeks, and I got a price for it. And so my alarm went off because it gapped up. And it's also a small little M top failure in the works. What other alarms? Wolf run alarm. Run. There's another bottoming pattern. That alarm went off over 1169. So let me see. Same on run, and I had IWM alarm go off. This is a put spread idea. It's not directional. So directional we define as it's a high probability setup, multiple time frames. We want to buy the stock or the option, a call or a put. This is not a swing pattern. It's a put spread pattern that we just sell the 175 put, making the bet that it's going to hold Thursday's low until Friday. Now remember, Friday, equity markets close at 1. Thursday holiday, Turkey Day. Friday off at 1. All right, those are all my pre-market alarms. Let's see what else I got here on the watch list. TEO, I just saw gapping up. That's a big bottoming pattern on the monthly. There's no reason this can't go to $10. So it's a big gap. So let's watch it on a pullback. GGAL. Now I missed that over the weekend, or else I would have put that in. That's a beautiful inverse head and shoulders bottoming pattern at the flat 20. Now this would have been ideal for a 1, 2, 3, which means we get an inside bar in the upper third of Friday's day, and then tomorrow we time. But the gap's too big. Look at my horizontal line. Gap's too big, so you're gone. GDC, another bottoming pattern. 442, gap's too big. Look at the monthly. Man, this thing was $350. Wowzer. What does that company do? Pelletier, yeah. I think I had that on my list, Thomas. I want to now see that's a continuation far from the 20, but the upper 85% of that bar. So Pelletier is very bullish, sure. All right. I hope I'm not having internet problems here. Shoot. All right, CCJ. It's strong as can be. Remember we were watching the stocks on that sector last week. RH alarm went off, another bottoming pattern. This is a
Coin gapping up from a consolidation. Got room to go.
well, Greg, I think I think so. That's both though.
You're breaking up. I couldn't understand what you said.
Yeah, I forgot to look at that. Wanted that. Why my internet's not working.
I'm saying it's a buyout.
Shoot, sorry, you all. I think I saw on CNBC a ticker that said that. Not a ticker, lower third. But it's not acting like a buyout. It's acting like a stock. So I don't know. I don't know. Boeing put spread of juice. Go through the checklist. You could do the 205s. I'll look. $0.30 is all. 30 by 37. All right, so I said Breeze. Let's see what trade Breeze was.